Take it away, Jeff.
Great. First, I want to thank my hosts at SVCN. Thank you, Kira. Thank you, Wendy. Thank you, Jen, for doing all the work setting this up. I also want to thank my FASS colleagues. It takes a team to do stuff like this, and I've been learning since the day that they started talking about PPP. And one of the themes you'll hear through this is that nobody's an expert, but we're all learning together. So it's just great to have teams of people who are practitioners, and we're all getting close to gaining expertise. But this is still a brand new giant program that people are beginning to wrap their arms around, and some of the fluff and uncertainty is being boiled out. But it's big and crazy and still being worked on by the folks who are making decisions about it, and we ain't them. So we're hopefully going to provide you with some information today that'll be helpful and provide you the opportunity to ask questions today and follow up with other questions later. So I'm looking forward to that. Thank you. So first I want to talk a little bit about the Health Trust. The Health Trust exists to build health equity in Silicon Valley. Many of you are familiar with it, and we're just pleased to be part of the Health Trust family at FASS. The Health Trust has three major foci: as a funder, as a provider of direct services, and as an advocate in the nonprofit community, both to other funders and to governments and to major influencers. So they have this, we have this advocacy, funding, and administration of integrated programs, and the programs include food. Many of you are familiar with the Meals on Wheels program. We'll talk a little bit more about that in a moment. Working with folks who have chronic diseases, including research, and then prioritizing health and housing. Housing is one of the primary social determinants of health, and the Health Trust is heavily invested in making that better in our county. Today, the Health Trust is doing some remarkable things. Just Sunday, there was an article in the Mercury News about how they're partnering with Meals on Wheels and DoorDash. You have all these DoorDash folks who aren't able to fill their cards, and you have all these meals that need to be delivered. I believe the demand went up 5x during this crisis. So matching volunteers and DoorDash drivers to the need has been one of many success stories that the Health Trust is impacting our community with today. So transition a little bit about, so what does that mean to FASS? So FASS is part of the Health Trust. The Health Trust was founded back in '95 when Good Samaritan and the Regional Medical Center was sold to HCA, and they used that funding to start the Health Trust. Some of you know Ira Holtzman, who's my predecessor, a great guy, and he built the team to serve so many nonprofits in this area and beyond over the past 25 years. Today, FASS serves over over 80 nonprofits, mostly in Silicon Valley, all sizes, pretty much every sector. We have 30 accountants, and we do a great job of outsourcing monthly close functions, grant billing for government funders, preparing packages for your board meetings, and prepping for audit. We tell our accountants that their report card is the audit. So we want to make sure that we're taking care of our clients by keeping tabs on the proper compliance matters and just keeping the books well. So we do a pretty good job of that, and we're excited to help you all. We also have a consulting practice where we help many of our clients and folks who don't have our regular client needs with tricky things or interim work. So I've been around in the Valley for a few years and love helping out at FASS. So diving into our meat, we'll start with what if we don't have our PPP loan yet? It's really interesting. This Cabbage.com is one of the new fintech companies that have started up to help disintermediate banking. A lot of folks have reservations or trouble with normal banking. They love doing it online, and Cabbage is one of the companies that's doing a good job with that. And we have a client who applied last Friday and was funded on Tuesday. So there's good stuff going on there outside of some of the big boys. The big boys are doing a good job in some cases too. But if you're trying to figure out what you should be doing next and you haven't started, Cabbage might be a good place to start. Some of the other non-traditional financial institutions are also doing a good job with this. And if you're still looking, think about the banks you're already working with, banks that you might have had an account at but it's dormant, a bank that you have tiny amount of money in but you haven't talked to for a while. A lot of these folks are still doing loans, but each bank has its own process. And if you run out of folks to talk with, many of your board members have good relationships with banks. I just talked with another a CFO who was struggling until his board member had his nonprofit actually accelerate their process because he's a major venture capitalist and said, hey, you guys aren't giving this nonprofit the right attention. Please take care of them. So the banks are getting a lot of bad press. Much of it is earned, but essentially the banks are making the loans and the federal government is guaranteeing them. So there's this crazy thing called fractional reserve banking where banks actually create money by taking deposits and loaning against it. The rules for how that works have been loosened up so that they can create more money with these loans. But the banks are looking at today's circumstances and looking forward, not asking for people to cry for the banks, but it's a tricky situation for them. And I've talked to multiple good nonprofit bank representatives who've had their hands tied by the bosses or the process. So they're trying to help, but it's a crazy set of circumstances and it's tricky. We've seen nonprofits run into limits that the bank had, and then the first batch of funding was closed. Now they've opened a second one. We'll talk more about that. But it's been an unusual process so that if we had this for the IRS individual payments, it would be a very bad thing. So I don't know that makes it a good thing for what we're doing, but it's the thing we have, so we're doing the best we can with it. I do anticipate answering questions as we go, and some of them I will answer at the end, and some of them I will answer as we go. So I just want to let you know that. So please keep your questions, enter them into the chat box, and we'll keep rolling.
Hey Jeff, this is Jen. Did you want to you want to do our poll now?
Yeah, that'd be great. I think there's two polls. If you do one first, that'd be great.
Oh, I've got both of the questions in one.
Oh, that's even better. Go for it.
All right. So we're gonna go ahead and do the poll. Actually, Wendy, can you get it started? It's not letting me access it.
Jen, this is Wendy. I am also not able to access it right now. Give me 1 second. I'll see if I can figure it out on the back end. So proceed, Jeff.
Good.
Let's see.
I'll keep rolling, and just let me know when to stop so you can do the poll, if that's okay.
Okay, thanks, Jeff.
Okay. So this is deliberately a very ugly, messy slide to show things are complicated. The banks are actually making money, of course, by providing these loans, and they have a processing fee that they're receiving from the government. The trick is that even though they get a larger percentage on smaller loans, there's an old joke in the finance business that it's not 10 times harder to write another zero. So you can see that they are incented to do larger loans. So I've worked with nonprofits, very small, under 100,000 in revenue, who've been successful, and some that have been unsuccessful. I've worked with very large nonprofits who've been successful and unsuccessful, and it kind of depends on the bank. So it's, but I've also seen nonprofits who were in line on the very first day and then couldn't get any kind of answer, and then they wound up getting funded without a whole lot of information in between. So it's been a very frustrating process for many, and it's just tricky. So how did we get here? So we all know about this COVID-19 thing. It's a terrible tragedy. It's affecting the entire world. we could have interesting discussions about how or why or could it be better. But it's a terrible situation for those affected, and we're all affected at some level economically, and we're just trying to work through it. So the government has reacted in an unprecedented fashion. You just don't hear about $5 trillion programs. It's the first one in history. The goal of the Payroll Protection Program is to have employees stay with their employers rather than have them join the unemployment rolls. But we also know we have record unemployment filings as well. So this has helped but not stopped the problem. So we talked about phase one. That started on April the 3rd, $349 billion with a B loans through the banks from the Small Business Administration. In 13 days, they made more loans than they had in the prior 14 years. Just a amazing amount of action here. Phase two opened Monday. I just looked at the SBA site before we jumped on this call, and they're still open. At some point, that door will be closed. So again, if you haven't done this yet and you're thinking about it, there's no time like now, and there will be a time where the funds are exhausted, and there may or may not be any kind of phase three.
All right, Jeff, I think we're ready to do the poll now.
All right.
Okay, let's go ahead and launch it. Everybody saying it?
I see it.
Oh, good. Oh, okay. We'll just give people a little bit longer to fill it out.
Can I say hello to Jeff?
Go ahead.
Well,
Hi, this is Ann Marquardt, Project Sentinel. I'm going to stop the video again because I'm eating an ice cream sundae, and you know,
you have to share.
It may get messy, but I'll come back on with the video in just a minute.
Thank you.
All right.
All right. Okay. My next slide says, nobody is an expert. And that's the best quote I've heard. It's from the FASS CFO, one of the very best nonprofit CPAs I've met, Andrea Elliott. There's so much information flying around, and often when there is a $100 billion program, it is debated in Congress for months, and they did, in essence, $5 trillion in a couple of weeks. So it just there's going to be messes at least around the edges and even into the center in some of these cases. I was talking about experience with banks. Some of these folks, you know, good-hearted, honest, earnest folks who, but with big organizations or complex organizations where they just weren't getting the story fully baked. It's not that anybody was lying, but we all got partial or misinformation as the cake was being baked. So it just been very frustrating for a number of nonprofits and for-profit businesses. Here are some of the folks that I've sourced personally for information. SVCN's been very helpful with a number of COVID-related issues, and major law firms and consultants and CPAs in the area There's some trade associations that are both local and national that have been helpful. And I lost count of the number of webinars I've been on before we gave this one, before I even knew there was going to be this one, but just trying to learn and share information. So that's all of our goals. So the next question is, are you confused yet? I love something called an interim final rule. So there's another crazy example. The actual application that we filed, the first one was dated March 30 and said so at the bottom. The second one came out on April 1st. You can't make this stuff up, April Fool's Day, and it was dated April 20. So there's been a whole lot of confusion and people trying to get stuff right, doing their best, but it's just, in some cases, too much, too fast. So I do want to talk about this form. If you'll see that at the bottom line here, it says purpose of the loan, and you get to check boxes: payroll, lease/mortgage, utilities, and other. I still haven't found anybody who has filled out the other yet. Some of you might have, and I'd love to hear from you on that. But the guidance I had was, as soon as you check the other box, you slow down the process and potentially risk your place in line. When I saw, after filling out this very simple form, simpler than many credit card applications I've seen over the years, I thought, this is really a loan application. But then when we started hearing about and seeing information come back from the banks where they're asking for what I'll call real underwriting information, your tax returns, your Forms 990, your payroll tax returns, letters of authorization from your board that you're able to enter into loan agreements. Then I realized it was moving along in a more orderly way. And there is no way the government could have done this on a central basis. It was smart to distribute it to the banks. It just happened so fast that nobody could have predicted the pieces. We could have predicted there would be chaos, but which pieces of chaos couldn't have been prevented based on the time frame. So now I have my loan. How do we make it forgivable? So you can see on the form, they clearly call out these 4 categories: payroll, lease or mortgage interests, utilities, and other. So those are what we call eligible expenses. Oh, that's so interesting. Okay, so it's all about the bank and the feds. I'm hoping that slide's coming through okay. Can you folks see that my slide at home is looking kind of funky? Is that legible? Thanks, Ann.
Looks fine for us. Yep.
Good. So it's still early. As I keep saying, there's folks who don't know what's going on, and some of those folks are the people making the rules. So they're taking a bunch of legal and accounting guidance to figure out how to make this work properly. It's kind of fund now, figure out forgiveness later. But it's going to depend bank by bank. So we're not exactly sure what's going to happen with all of the requirements, which again, in a loan situation is somewhere between interesting and scary. But once you have the funding, there are going to be rules that make sense that will be resolved. We just don't have them yet. And I've talked to really smart CPAs in the same firm who disagree, partners. Okay, so here's a list of eligible expenses, and you'll see these lists elsewhere, but I partially wanted to give this list to walk through it and partially to raise questions. So one of the more important things is once you have the money, as soon as you're funded, you have 8 weeks to spend it on eligible expenses so that those funds can be forgiven from your loan. So it's on a cash basis. A lot of us do accrual accounting, but it's just money that goes out of your account for eligible expenses. 75% of it must be payroll for the loan to be fully forgiven. And among the payroll expenses, you have to have 75% full-time equivalence from the loan application for full forgiveness. Now, if you don't make 75%, it doesn't mean it's 0%. It'll be forgivable. It'll be prorated. So there's a number of categories of expenses that have been well defined. So salary, wages, PTO. So the allowance for separation or dismissal, group health insurance, and retirement, those are clearly eligible expenses. Some that are not eligible is any employee withholding. So if I co-fund my insurance payment, or if I make a contribution to my retirement plan myself, that is not forgivable as part of the loan. Federal taxes are also not forgivable. That's a separate bucket of money. Workers' compensation, I've heard some arguments in favor. I've seen one payroll service explicitly say there's not clear guidance on this, but we're pretty sure that's not going to be. I'm going to take a second and look at the poll results. It just popped up. Okay, that's my second. So independent contractors, the first guidance on this was that please include your independent contractors. Now they said, no, don't, because they can all apply individually, either for their own PPP, or they can file for unemployment. The unemployment rules have changed so that there are some nonprofits who don't participate in the unemployment pool, but I know of one, actually I have one friend who just got fired from a nonprofit yesterday. And she told, I said, hey, I know your organization, they don't pay into unemployment. And she said, I've been told that that's okay because they've suspended those rules and they're making sure that people can get unemployment even if the organization didn't pay in. So they're changing a lot of rules just to make sure it's too strong, to help lessen the blow of this terrible crisis economically. Some of you have people who are paid over $100,000. If you do, only the first $100,000 is eligible. And what that means is over an 8-week period, just do the math, it's $15,385. So if you pay somebody more than $15,385 over an 8-week period, that amount will not be forgivable. I've heard people ask about raises and bonuses. I think it's a bad time to try to meet the forgivability to just make up raises or gives bonuses. That's not the intent of the program. You might be able to have that work, but I wouldn't advise it. But I know one organization that's on a fiscal June 30 year that gives bonuses every June. So if that's already in your budget, it's defensible. You might have other logic that also could defend a bonus or raises if that's the time of year you normally do it. Okay, this is a really interesting one for government-funded entities. If you have your payroll funded by your grant, and when you're billing them or sending an invoice against your government contract, you may not, as in must not, you are unlikely to be able to do something called double dipping. You can't bill both the government for the covered expense and then expect that to be a forgivable expense under your loan. I'm familiar with many agencies where this is going to be a big issue, and working with a $25 million a year mental health agency that's over 90% government grant funded. And so even though they have a multi-million-dollar PPP, almost all of it will not be forgivable. And so they have to figure out whether they're going to pay back almost all of it as soon as they figured out the forgiveness. Because even at a low interest rate, it may not make sense for them to have borrowed money in their bank that they're not certain how they're going to pay it back. Auditors have already weighed in on this and said no, but some pundits have left the door open for double dipping. I'm not advising it. I'd want to see it from the SBA or the Treasury Department, but people are talking about all kinds of crazy things. So I don't want to say definitively things that have not been definitively ruled. But I wouldn't advise that people plan to both bill the government, which includes your county, our county, for your normal invoice, and then have a forgivable loan. There are some things you can do though. So as an example, if you have the ability to postpone or time your payroll, you might want to apply the PPP to the eligible costs first and then bill the rest to your contract. I've seen many agencies use this as a time to reimburse phone and internet expenses for so many of us are telecommuting now. But I would advise that you keep in touch with your board on things that have any kind of risk. If your agency is audited, I'd be talking to my auditors. Your bank may make the final determination on what is forgivable, but they may also have to have a layer of SBA approval. Nobody knows yet. So I was going to have a bunch of slides interspersed through this saying we don't know yet, but I'll just keep saying it instead of having those as slides. Okay, what if my loan is not 100% forgiven? So it'll convert to a 1% interest rate for 24 months. That's the lowest price loan I've seen. There's no collateral. It's deferred for 6 months. The interest is deferred, but it will accrue. So it's not a 0% loan for the first 6 months. Be careful that you have the ability to pay it back. If you don't want to keep the loan, there's no prepayment penalty, and we know that more will follow on this. There's still a lot of open questions. How to track eligible expenses. I've seen a number of banks and some websites say, keep a separate bank account. If you talk to a CPA, most of them will say, as long as you have a good general ledger accounting system where you can flag or code the eligible costs, you don't need a separate bank account. If you're a small or very simply run organization, it shouldn't be that hard, but that might be a good reason to have separate bank accounts so that you can keep easy track of it and not have to worry about it. There are spreadsheets available on the web. Most banks are issuing spreadsheets to keep track of this. And it's important to keep your original documentation handy. The bank may request it, some will require it. And so something that sometimes I do and sometimes I don't, which I'm doing now, is to take copies of the checks before I pop them in the mail, not wait for them to be canceled, because sometimes those checks are imaged properly on the bank website and sometimes they aren't, so I'd want to have a photocopy handy. Your invoices, your payroll log from your payroll provider, the ADPs, Paychex, Paycoms, Trinets of the world are doing a pretty good job with this. Tracking both the dollars and the number of employees, and then your payroll tax returns, your 940 ones for the state and your DE9s and DE88s for the feds.
Hey, Jeff, do you want to take some questions? We've got a bunch here. Oh, or
sure.
you want to finish that slide first?
I think we just got to the point where we're going to ask questions.
All right. So we've got one question from Janet. She said that they received their PPP loan from Self-Help Credit Union. Do you know if we prepay our annual retirement contributions, would this be included in the eligible payroll costs for forgiveness?
So I would say that's risky. I'm not going to tell you no. I think anybody that you ask that has a normal view of how loans work would say there's a purpose for the loan. Are you meeting the purpose of the loan? And so if you accelerate things, that makes it tricky. Now, one exception is that if you have a government grant that allows you to defer one expense. I had a slide where we talked about computers. Many of us have had Windows 7 problems and we had to replace a whole bunch of computers, but maybe we didn't have the budget to replace all of them. So if your grantor allows you to buy computers with a budget modification and lower the amount that is being covered for payroll, that might be a good reason to use the normal already existing grant dollars to pay for the computers and then take the payroll dollars that were going to be covered by the grant and have those covered by the PPP. But if you have an extra expense, like retirement fund contribution, if you try to bundle it beyond the normal period, accelerate or defer costs, I would be very careful about that. Again, I don't know about your specific circumstances, but my quick answer is somewhere between be careful and no.
All right, thanks, Jeff. Yiwei asked if we received a 10,000 advance in a PPP loan, what does that mean about repayment? I've read that we need to use PPP loans to pay back the 10,000 EIDL. Is that true?
Hi, Yiwei. That's the easiest question we'll get. The answer is yes. Some of you don't know about the EIDL loans. If you're an organization that is substantial, has multi-million-dollar budget, if you're going to have to wind up paying it back anyways, it may not be worth your trouble, although the EIDL application is very simple. I went through the exercise of doing everything except hitting submit just to make sure I understood it for some of our clients. So there's no reason not to apply for an EIDL, but if you do and you have a forgivable loan from the PPP, you will have to pay that back. Good question.
All right. Kim asked, how about we hired more employees that, or to help during the COVID-19 emergency?
I think that's a really good question. And the answer is it's probably an allowable expense, an eligible expense, because what they're looking at is how many people did you have and what are your payroll dollars? Now they set up the calculation that you take 12 months of payroll, which might have been calendar 2019. It might have been 12 months ending January or February 2019, but whatever period you took and put on the form, they're going to compare that. So it is possible that you could hire so many people and have such high wages that you exceed the amount of forgiveness. That's okay. If you have some funding source that's covering that and this makes it forgivable, that's great. And that, I think, reinforces the purpose of the loan, which is to have people on payroll, and you might have been able to do that better because you received the loan. So I think the answer to that one is again, no formal rulings on this, so I'm going to go with probably yes.
All right, Gisela is asking, this is for the past 2.5 months of payroll, correct? Or is it for the next 2.5 months? We got funded last week.
Hi, Gisela. I think the answer is it depends on what period you used when you filled out the form. So once you get the money, it's 56 days and counting, ready, go. The amount of money that you applied for was based on a 12-month period where you divide by 12 and then multiply by 2.5. So that's already set. However you did it, and that's fine. But for the 8-week period, that determines what's forgivable. And Gisela, if you want to follow up with me later or even during this time, if we have time, I want to make sure I answer your question well.
Thanks, Jeff.
All right, Linda is asking for CDBG funding. Can we first use our PPP and then bill each city for other expenses?
It depends on your funder. So I don't know how the contracts work for your specific community development block grant. But I had a bullet point on a slide earlier. It says, talk to your project officer. They'll make a determination as to what you can and can't do. Sometimes this requires a budget modification, but that's something I'd be thinking about. I think it's a good idea.
Okay, and then she also asked, for CDBG, can we still get reimbursed for payroll costs since it's not 100% billable?
If it's not 100% billable, that is actually in your favor towards forgiveness. So let's just say that you have one grant where it's 100% billable and you bill the grantor. You're probably not going to have those funds available to be forgiven. Let's say it's 50% billable by that grant. That probably means that half will be covered by your original grantor and half can be forgiven through the PPP. Even as I'm saying those words, they make sense to me, but they sound funny. So again, if we want to follow up more on that, let's do it. I think that's maybe the most important question we're going to have today.
Okay, Pam is asking on expenses, if I have a utility bill for April and I was funded on April 26th. Can I put that bill to my PPP, or should I use May and June instead?
Hi, Pam. Glad you're here. The short answer is, what day did you write the check? If you wrote it on 4/20, if you wrote the check on 4/26 or after, you're golden. If you wrote it before 4/26, it's not on that. It's not in the window.
Okay. Marcia's asking, if we let go of some employees now, we got funded already via PPP, does it affect the loan?
It depends, but let's just use large numbers and say you had to lay off half your staff. And we all know businesses and some nonprofits that have had major cutbacks independent of the loan. You just couldn't hang on and wait for this to happen. Or even if it did happen, there were other impacts on your operations that just would not allow you to keep the folks employed. Again, a tragedy. So it's really going to be a question of, when you filed the application, how many employees did you say you had, and how much payroll did you say was your average monthly, and then they're going to compare how much you paid and what your head count was. And if it's over 75%, you're okay. If it's under 75%, there has not been a formal ruling, but there's been a lot of talk saying they're going to prorate it down. So let's say you had to cut let's say you had, just use easy numbers, you have $100,000 payroll during the 2 months of that they're counting. It's 56 days, but let's just call it 2 months. So you have $100,000 in payroll, but last year you had $200,000. So the forgiveness would probably work that they gave you a loan of $250,000 because it's 2.5. You only had $100,000 of payroll, and for the purpose of this example, let's say you had no rent and no utilities. Probably $100,000 of that loan would wind up being forgivable, and the rest would be a loan, or you just pay it back or prepay it.
All right. And Kia, you asked if the slides will be available. Jeff is actually going to put together a fact sheet for everyone. So that will be made available to everybody after this presentation. And then Diane is asking if you could talk more about the FTE requirement. What if we have staff that go on family leave? Do we need to rehire? What is the majority of staff? What if the majority of staff are part-time?
Right. So there's some complex calculations that relate to full-time employee equivalent that I haven't seen formal documentation from the banks as to how they're going to count it. But if you have part-time people and that's normal, then you're going to have apples and apples between the two periods, between the period that you based your loan application on and the period that you have during the eligible expenses. So if they're close, you'll be fine. If you have part-time people usually and you have part-time people now, you'll be fine. But they're going to look at your full-time employee equivalents to see if you're at 75% of those. And they'll be looking at, when I say they, I mean your bank, will be looking at your payroll registers to determine where you are on that.
Okay, Nick is asking, if we maintain all employees through the 8-week period, but our business is still not able to operate, is there a risk that layoffs after the 8 weeks will affect forgiveness?
So I don't want to say there is absolutely no risk because this is such a complex program, but that's the way I understand it. It's during those 56 days, that's your reporting period. And the hope is that we're going to have some kind of dip in the economy that is, V-shaped or V-shaped. We just don't know. But that things will pick up so that even if you're not able to maintain those employees, they'll go into a better hiring environment than we have right now. For those of you who are doing okay, it's a great time to be looking and hiring. I've been seeing some great resumes. I don't want to make light of anybody else's tragedy, but there are opportunities out there for folks who can hire.
John is asking if we have staff doing teletherapy and getting paid for that service, but their paycheck is lower than their paychecks prior to shutdown. Can we use the funds to make up the difference between current paycheck versus paychecks prior to the shutdown? That's
a great question, and I'm pretty sure the answer is yes. What they're looking for is the amount that you had in your base level of payroll when you applied for the loan and the amount you actually spend. So if you spend less than, if you spend less than you applied for, then in essence, you're risking, you're not risking, just the math says that that part of the loan won't be forgivable. So it's important to have, if you have opportunity to make payroll and take care of your clients, I'm sorry, your employees, then that's a good time to do it, and that's the exact purpose of the loan.
All right, this question is for clarification. We have a $250,000 loan. With federal, state, county grants, we may have only about $100,000 of allowable payroll in 8 weeks. In your opinion, will we be able to seek forgiveness for $100,000 and keep the remainder as a loan?
Okay, so there's actually a couple questions in there, so let me try to pick them apart. If those payroll expenses are billed to and paid by your government contract, then chances are either in a reconciliation process with your grantor or by the way the PPP works through your bank, and we don't know yet, you're going to wind up having to pay that money back and it won't be forgivable. That would be classic double dipping.
Okay, next question is, if we decide to not use the unforgivable portion of the loan, when should we decide to pay the lender back by?
You get to choose. You've got a 2-year loan at 1%. A lot of people would say, that's the cheapest loan I'm ever going to see. I'm going to hold on to it for 2 years, and I'm going to try to build up the amount of funds I need to pay that off at 2 years minus 1 day. But I'm really glad I have a loan during this very stressful time. Other folks are going to say, our organization manages money well, and it's a little risky to have extra money in the bank. It sounds crazy even as I say it, but I know organizations who feel that way. And if we're going to have to pay it back and we don't have a clear way to pay it back later, let's pay it back now, so there's no prepayment penalty.
All right, next question. Would temporary assistance engaged through an employment agency be an allowable expense under other?
The answer is, so there's a couple things here. Number one, my understanding is you would have had to check the other box at the time you made the application and said that. But I'm pretty sure the answer is no, for the same reason as independent contractor expenses are also not eligible. The folks that you hire as independent contractors, or the agency through which you hire a temp resource, they're eligible to file for this as well. And so there's the opportunity, if you could, that they would too, and then that would be double dipping.
All right, going back one question. We pay twice monthly. Say we get funded on May 1st. Can we pay our second half of June payroll early so it's within the 8 weeks?
I'll never tell, but somebody might check. So if you're within the 56 days, you're golden. If you're outside the 56 days, you're not. And if you adjust things to make that work, there's a principle of auditing and of tax work that expenses should be ordinary and necessary. And so I don't think it's necessary to prepay your payroll. So I think that could be challenged. So I would not recommend that.
All right, next question is, we're paying a 15% additional hazard pay. Would that be allowable for PPP forgiveness? Yes,
unless you're billing somebody for it and they're paying you for it. So I'm working again with another agency that has hazard pay, or they're calling it COVID incentive, because I guess the word hazard pay has legal implications. So they are paying more, but their grant is covering it. So in their case, it would not be eligible for forgiveness.
All right. If you use the money for payroll for 8 weeks and you get
Can you do
reimbursed
me a favor, though?
for later for funding after 8 weeks, is it still forgiveness or payback? I got some interruption earlier when you covered double dipping.
Great. So there's mixed principles at work here. So I think we can boil it down to logic and what makes sense. So if during the 56 days I have $100,000 worth of payroll expense, and that exactly covers what should be forgiven, but then I'm paid later by an entity for that same payroll, I would say that is not forgivable. That'll be worked out most likely in a reconciliation process when there's usually there's some kind of year-end contract work with your funder to say what were the expenses you paid for, and they usually make you sign an affidavit saying that they weren't funded elsewhere.
All right, and then this last one is just clarification on an earlier question. I think that maybe I didn't read it off right, but in the scenario on the $250,000 loan, $100,000 in payroll is for not grant-funded staff. It is for other staff. Can this org ask for forgiveness for that $100,000 and hold a $150,000 loan?
So I think the answer to that is yes. So if you are specifically using these funds, the PPP funds, to pay people who are not covered by grants, I think that's the exact purpose of it. And if I understand the question properly, the answer is yes.
Okay, and it looks like we have one last question. If we have some staff who make over $100,000 based on the revenue they generate in our fee-for-service model, can we only pay them the maximum reimbursement for PPP, or can they also make additional money over $100,000 based on their billings to families?
So think about a chief medical officer for a federally quiet. Sorry, my phone kicked in. Let me get rid of that. Oh, sorry about that. So a federally qualified health center, there's a number of large ones in San Jose, have chief medical officers who make north of $200,000–300,000 a year. The first $100,000 is allowable. If they have an incentive or anything else that gets them over $100,000, again, the first $100,000 is allowable for forgiveness. Anything above that is not. Now, here's one tricky thing. The benefits are. So if I have an employee who makes $110,000 in salary, and they have fringe benefits and payroll taxes, payroll tax bad example, but fringe benefits, health insurance and such of another, let's call it $15,000 a year, you can actually bill the prorated amount of the $115,000. So they make 110 plus 15. So there's a cap of 100 on their wages, but the other 15,000 of benefits, again, for the 8 weeks, is forgivable.
Okay, a couple more questions. If we
keep them coming. That's why we're here.
If we have fee-for-service contracts, would it still be double dipping since it isn't a cost reimbursement program? Another training said that fee-for-service would not be double dipping.
I'm pretty sure that that's correct because it's a different funding source. And so I just talked with an expert again on federally qualified health centers, which are primarily fee-for-service funded, and the answer in that case is that is a forgivable expense, an eligible expense for forgiveness.
Okay, can we prepay the rent for facilities with a PPP loan?
56 days. If you're paying more than 2 rent payments, I'd be scratching my head and wondering why did they have more than 2 months of rent within a 56-day period. So if you're prepaying to make a second payment in that period, I could see it. If you're prepaying to make a third one, I think you're on thin ice.
All right, so this one has a few questions inside of this question. Our bank denied our application originally because we don't have a credit card or loan with them. So we got in line. About 25 days later, we applied. Do we have any way to go forward in the line? Are we out of luck? Should we apply with additional banks? And sorry for all the questions.
No, these are great questions. Don't be sorry. So this is actually something I should have included in my slides. So I'm really glad you asked these questions. If your bank is giving you any grief, find another bank. Cabbage.com with a K is super easy. I don't know these people. I've never met anybody who works there. But after I heard somebody applied on, and it wasn't a small loan, it was a couple $100,000 loan. They applied on Friday. It was in their account on Tuesday. I was pretty excited about that. So you can't do anything to jump the queue besides have a board member who's a venture capitalist or something like that, which is a real live example I heard today. But it was crazy to me that you're a good organization that doesn't need to borrow money and they say no because you don't have a loan arrangement. But you can also hopefully understand, if not appreciate, the bank's position that they're going to lending customers first because they already have that paperwork in place. They already have that relationship. And from a very selfish perspective, if you're the bank, they're protecting their other debt by helping get funds into the account of a client of a banking client that owes them money. So I don't like all that, but it's true. I hope I answered those questions.
Okay, so we have about 5 more minutes, and there are 2 questions that I have left to read off. So if you have a question, hurry up and submit it. Let's see, if we have allowed employees to cash out vacation in the past, will that be acceptable as a way to boost our payroll expenses to meet the full forgivable amount?
Okay, so that is actually a couple questions. So one, as a CEO and a longtime person having HR report to me, I would say in normal circumstances, it's a bad idea to let people cash out PTO. People have emergencies of medical or other personal natures, and sometimes it's unavoidable. But it's healthy for employees to take their time off. And we make exceptions for exceptional situations. Is this an exceptional situation? I think there's some business judgment there for you. I don't think there's a rule that says you can't have PTO cash out be part of the eligible expense for forgiveness. But again, think about if it were audited, would somebody say that's an unusual pattern, what happened, and start asking questions. So I think that's more risky than some of the things we talked about and less risky than others. But I wouldn't say it's evil. I'd be looking at it case by case rather than telling my entire staff to cash in their PTO.
Next question is, if we choose not to bill our government grantor and just bill the PPP loan, is that allowable? Do we need to check in with the government grantor?
I would check in with the grantor because they might wonder what's wrong and whether you need next year's grant. I've talked to a lot of nonprofits who say, with this PP loan, we are fine. Everything's rosy. Through June 30th, it's awesome. Well, if you've been in this business for a little while, know that June 30 is going to come and go like nothing. And if you're not taking care of your long-term funders, or if you're not coloring within their lines, it could be interesting for your future grant applications. So I'd want to keep them in the loop.
All right, it looks like there aren't any other questions. And I know that you received some via email as well. I assume that you'll be including those questions and the answers to those in your fact sheet. Is that right, Jeff?
Yes, my fact sheet might look a lot like my slides, so we'll see how that goes. I'm looking forward to those questions so that we can kind of have a shared experience within the community of how we're learning together. I'm super excited about that.
Oh, wait, we got one more question in here, and then I think we'll have to end it. But Maureen's asking, we pay twice monthly on the 5th and the 20th. We got funded on April 27th, so the eligible period goes through June 22nd. that period will only include 3 pay periods. So will we only be able to get essentially 6 weeks forgiven?
So again, the good news is that if you were just funded, then you've got some time to figure this out. I can make a pretty good argument that if you're that 56 days of payroll would include 4 periods. So that might be a case where it makes sense to move it up, but I'd sure want to be talking to people before I did it, or know that I was risking it being ruled ineligible. But I think that's a good idea. I'd be thinking about that if I were in your situation.
All right, and then just the last questions about the FAQ sheet. It will be sent to everybody. Jeff is going to work on that and make sure that he gets as many answers as he can for all of you. And I will send it out to everybody who has registered for the webinar within the next few business days. So yes, it will be available to you very soon. And Jeff, do you have any other closing remarks for us?
No, we really do. There's at least one former client in this webinar, and I've talked with her since she became a former client. We talk to anybody about anything. We just want to help, and I think that's good for our business long term, but it's really good for the community. If you think of who the Health Trust is and what we do as an organization, we're really here to serve the nonprofit community. So I get to wake up every morning saying, how do I get to help over 80 nonprofits? It's just fun. So please let me help you. That makes my day. Thank you all very much.
All right, and thank you so much, Jeff. Thanks to my SVCN team for helping to step in with all the technical support as well. And again, if any of you have topics that you want to hear more about and want to learn more about things that your team could really use support with, please send me an email. My email address is going to be written in the chat box. And I hope all of you have a good afternoon. All right. Thanks, everybody.